Welcome to today's market report. European stock markets edged largely lower on Wednesday ahead of conclusion of the Federal Reserve's two-day policy meeting, with BMW and Volkswagen helping the German market outperform. DAX in Germany traded 0.1% higher, CAC 40 in France fell 0.1%, FTSE 100 dropped 0.1%. BMW stock soared 5%, climbing to its highest level in a year, after the German automaker said it expects a significant year-on-year increase in pretax profit in 2021, as it forecast a strong performance in all of its segments. Staying in the sector, Volkswagen stock climbed over 10% after the company said it expects its 2021 deliveries, sales and earnings to come in above the previous year's level, as it announced the start of its new strategy to deliver more than 450,000 electrified cars this year. The tone in Europe has been more subdued, with France entering a third wave of the COVID-19 pandemic. French Prime Minister Jean Castex told his parliament on Tuesday. This followed the Robert Koch Institute warning earlier on Tuesday that coronavirus infections are spreading exponentially in Germany, up 20% in the last week. France and Italy said on Tuesday that they will resume distribution of the AstraZeneca vaccine if the European Medicine Agency says again that the vaccine is safe for use. The EMA has already approved the drug once and repeated at a press conference on Tuesday that the benefits of the vaccine outweigh any risks. Germany and others have yet to reverse their suspensions. The Federal Reserve concludes its latest two-day meeting after Wednesday and is scheduled to release new economic and interest rate forecasts, with the Biden administration's $1.9 trillion stimulus package yet to have its impact. The market is beginning to anticipate interest rates rising sooner than in 2024, as the central bank's current guidance suggests. Other central bank meetings are also scheduled this week, with the Bank of England on Thursday and Bank of Japan's two-day get-together concluding Friday. Oil prices drifted lower on Wednesday, selling off despite the surprise fall in U.S. crude inventories of 1 million barrels last week, as detailed by the API. U.S. crude futures traded 0.2% lower at $64.66 per barrel. Brent fell 0.4% to $68.11 per barrel. Gold futures rose 0.1% to $1,732.95 per ounce. On the FX front, the GBP-USD pair finally broke out of its intraday consolidative trading range and refreshed daily tops around the 139.30 region during the early European session. The pair regained some positive traction on Tuesday and is now looking to build on the previous day's goodish rebound from the 138 neighbourhood. On Wednesday, the uptick lacked any obvious fundamental catalyst and could be solely attributed to some cross-driven strength stemming from a fresh leg down in euro against sterling. However, a combination of factors might hold bulls from placing aggressive bets and keep a lid on any runway rally for the GBP-USD pair. The British pound is likely to be undermined by the fact that the EU launched legal action against the UK for breaching the Northern Ireland Protocol and the Bank of England Governor Andrew Bailey's dovish comments. Bailey said that the central bank is committed to buying bonds at an elevated pace and also sounded cautious about the economic recovery. The market took this as the early sign of a possible downward revision of the central bank's economic forecast and might cap any meaningful gains for the sterling ahead of the BOE meeting on Thursday. Eurodollar has been clinging to 119 as tension mounts ahead of the Federal Reserve's decision. A touch of optimism from the Fed may be enough to trigger a new sell-off. Meanwhile, Europe's vaccination issues undermine the common currency. Powell and the Fed have a tight balancing act, acknowledging the recovery and a potential for higher inflation without stoking fears of a rapid rate increase. walking the fine line between worrying about jobs, cheering the expansion, foreseeing a gradual rise in inflation, and putting down fears of an early rate hike is prone to mistakes. That means volatility. It would take only a minor tilt to optimism to push the dollar higher. Sterling euro is trading around the key level 117 on the back of euro weakness, the highest level since 24th of February 2020, more than 1 year high. The dollar index was up 0.1% at 91.925, having risen for 3 straight sessions on support mainly from elevated US bond yields. Dollar yen was up 0.2% at 109.15, near the 9-month high hit earlier this week. This is today's market news. Thanks for listening. We'll see you next time.